Welcome to Wally Global. Today is May 9th, 2025. In recent years, everyone knows the economy has been uncertain. It's like this globally. Hong Kong in particular is significantly affected. Of course, now the stocks go up and down, but they've become a kind of internal cycle or rely on some Chinese concept stocks. Those businesses in Hong Kong that operate seriously, they've turned into shape. As you can see, there's no need to say more about this. We all have to wait for the times when these mainland enterprises use Hong Kong to obtain funding, which is good. However, there was just news that Moodys is significantly downsizing the office, meaning they will not renew the lease for 1/3 of the office space. Why is 1/3 of the office space not being renewed? It indicates that downsizing means what? It means large-scale layoffs. So, Moody's is quite special as a rating agency. It is Moody's Analytics, meaning it sees a lot of data, a lot of information, simply put, it's like a thermometer, it sees a lot of things. Yet, it still needs to make such reductions. What does this further signify? Hong Kong as an international financial center? Will it, Hong Kong, become an international financial center? Is there any connection with the fact that Chinese data is hidden and not shown to people? Does the continued withdrawal of funds, especially larger ones, also relate to this? Let's watch the video to look for clues around here. Also, Moody, Moody's not only reducing their office. Is there anything special about commercial office buildings? Watch my video. It's not just about that news, but also looking at its surroundings. Surroundings, those impacts and those clues, that kind of interactive relationship. Why not watch the video? Before we get started, please give this video a like and leave a comment below. Feel free to share this video with your friends too. If you're into this kind of content, make sure to subscribe to my channel and don't forget to hit the bell icon so you'll get notified whenever there's a new video. Thanks a lot. Responding to the report from the Hong Kong Economic Journal, the news from just 2 days ago is that Moody's financial consulting company or financial information company, Moody Analytics, so Moody Analytics, has decided not to renew the lease for 3 units on the 55th floor of Central Plaza, retaining the 56th. The floor? That's just a part of it. So the total leased area has greatly reduced by 33%. Previously, they rented nearly 20,000 square feet, and now there's only 12,900 square feet left. Wow, that's a reduction of about 6,500 square feet, which reduced the monthly rent from 1,350,000 to 1,100,000, saving over 500,000 each month. Over a 3-year contract, it saves 20 million, and if you renew, of course, they cut it down, making it cheaper. Rent now, Hong Kong is not like before. Did it already? Actually, Moody Analytics has been renting office space in the Central Plaza since 2007, so they are long-term users and tenants there. Since 2013, they had leased almost 20,000 square feet. This time, it can be said that it's the first time in years they have proactively reduced their scale, even though in these recent years, the rent has already been reduced twice. As everyone knows, some say the rent has dropped by half, some say by 60%, and some say by 40%. Generally speaking, it should be 40%, and that should be more accurate. Looking at how much they have dropped from $90 per square foot in 2019 to just $63 per square foot now. However, there's still no way to persuade them to continue renting such a large space, reflecting that even with cheaper rent, companies have no intention to reinvest. Expansion is not expansion, it's reduction. These are 2 different things now. Not expanding and actively downsizing by so much are 2 different things, right? And there's another thing. People say rent is expensive, but actually it's not related. I want to tell you, even if you reduce rent to 43, they would still cut down. Because when you have business and business is good, rent isn't too big of a problem. When you have no business, even $1 feels expensive. That's just how it is, right? Even if it costs $1, I still feel it's expensive. In short, rent is a false argument. It depends on the business. Okay, according to the first quarter report by CBRE, the vacancy rate for Grade A offices in Hong Kong has risen to 17.5%, marking a historical high. This means Hong Kong, after enduring many challenges over the years, the vacancy rate is the highest in history for a long time. Everyone understands the unprecedented situation Hong Kong is facing now. Although the vacancy rate in Central is only, according to the Hong Kong Economic Journal, only 13%. But this season, rents have fallen by 3.1%, already down 40% before. This season fell again, so the performance is worse than other areas, referring to this rental performance. It is forecasted that in the year 2025, the annual rent in Central will drop by another 5%. Now, if you think even Central is doing so poorly, how can office buildings across Hong Kong do any better? The industry is in big trouble. Investing so much money, around 500 to 600 billion in those buildings in Central, it becomes difficult. So Moody's analysis shows such a contraction, which is not an isolated case, but rather an individual example. Actually, in Hong Kong, the situation is that many of those retirement funds and large funds have left one after another. I'm only talking about these past 1 or 2 months, like I mentioned in many previous episodes. Many have gone to Singapore, different companies, headquarters. I have talked about this in many episodes before. I talked about it half a year ago. A year ago. This is just about these 2 months. Canada won. They have 1,500 billion in pension funds that have already closed their Hong Kong office and handed over to Singapore. These are not small companies with trillions in assets under management. These influential international financial institutions have chosen to withdraw from Hong Kong and move towards Singapore. Isn't Hong Kong supposed to be the international financial center, not Singapore? With the current situation, how does it reflect Hong Kong's financial status being impacted? Additionally, this is a relatively recent development. A British investment company, what's it called? Permira, right? According to reports, it will also close its offices in Hong Kong and Shanghai. The senior management moves to India. If to Singapore, then to Singapore. If to India, then to India. So what can you do? You need to pay attention. These already are not like the United States, which is not so friendly with China. We're talking about Canadian companies and British ones, which are also leaving. You don't even need to mention the United States. The situation with them is even more certain. In other words, they failed maybe because others are just business-oriented, right? What else? Those investment companies, those PE firms, they're constantly observing development, the economy, the climate, geopolitics, and Li Ka-shing, right? So I think it does have an impact. Don't say it doesn't, because they will act. Don't talk about politics. They're just discussing risk. So politics and risk are somewhat related. Therefore, if you're speaking from a business perspective, no matter whom they support, they have calculated where the risk is, and isn't it deducting points? There's a scorecard, right? All right, coming back to it. That's really a disaster, truly. Speaking of office buildings, Moody's leaves. We've seen people in the financial industry leaving. Moody's analytics and looks at a lot of data. Based on their judgment, I believe them because they rely on data and act from a business perspective. Right? And then previously HSBC also had some declines, right? HSBC's profits fell by 25%, right? It might drop to over 30. So the performance report, therefore the financial industry is actually brewing if Moody's it's like this with cutting office staff. Actually, HSBC has also cut many people, right? So if everyone does it together like this, it's a foundation, a basic industry. You say foreign trade is already lagging behind. That is, shipping, transportation, logistics. Those trading sectors are all lagging behind. Those are already a foundation. Finance is another foundation. And then travel, needless to say, right? So this is indeed concerning. You shouldn't underestimate Moody's. Treat it as just a company, because it really is. It's a ratings agency. You know what I'm saying? So it's not very good. Even when it relies on data, it can see even more than others. Even financial institutions depend on its data to make some judgments. It also leaves. Then you say it's done for, or it will reduce by 1/3. I'll also talk about it in the latter part. Actually, Hong Kong has transitioned from so-called governance to prosperity. The worst times have passed. Now both China and the United States are talking here. Many people want to come here, and stocks are also going up. Why is Moody's leaving seem to be so foolishly? There's a special reason, and I'll talk about it later. I want to talk about the office building market. With so many financial institutions leaving, how can it be good? It will only get worse, and they're just leaving now. It's been bad for a long time. The prices keep dropping and people are selling off. Even wealthy people are selling. Even those renting out are selling, right? Speaking of which, they left. And then what will happen to the remaining units? According to Xinpao, even though rents have already dropped significantly, the unit that Moody's vacated on the 55th floor of Central Center is now only listed at 42,000, and it even includes renovation and furniture, saving a lot. However, the market response is cold. No matter how much the owner reduces the price, they may not find a buyer. The buyers are tenants. The response is that the situation of oversupply is very serious. So doing business in Hong Kong is really difficult. Actually, the Hang Seng Index in Hong Kong, those stocks are actually disconnected from Hong Kong's economy. I'll talk more about that later. Let me add a bit more information here. Central Center originally was an asset under Chung Kong. In 2017, Chung Kong sold 75% ownership to a consortium led by CPPCC member Luo Wenduan. The units on the 55th and 56th floors that Moody's rented were purchased by Shimao founder Shu Mingmao. Everyone's falling behind except Li Ka-shing. Now, HSBC has just issued a report that is optimistic about CK Asset Holdings, or it reveals that Li Ka-shing is currently selling off assets on a large scale. There might be another look. Whether there's anything to fear, we'll talk about it later. Although their ownership has changed hands several times, Moody's Analytics has continued to use it with different owners. It can be seen that they are a stable tenant. When the environment isn't good, they choose to vacate some of the floors and continue to rent to other places. Only a third is left. I want to say more about why Moody's is reducing like this. First, as mentioned, the global economy is not doing well and Hong Kong is even worse, meaning reduced investment. So, you see, it means that they might lay off employees because with fewer employees, they don't need to use so much office space. This is something everyone should pay attention to. In the financial sector, actually, there's something to note. Quite a few institutions might reduce staff. HSBC is already doing it, right? This actually means that with Moody's leaving, the financial, banking, and investment sectors aren't doing too well, right? Including those things that were mentioned earlier. Private equity funds and many large funds have left, right? These are not very good. Additionally, especially when discussing why now the Hong Kong stock market is rising, the worst time is over, right? Is it really over? In my opinion, I'm afraid of some worse unexpected events. That is, if nothing happens, the worst time might be over. But unexpected events will always occur, especially in terms of China-US geopolitical issues, right? But speaking of the positives, many companies from the mainland have come to Hong Kong to list, and Chinese concepts have returned. If that's the case, Moody's should have more business. So why is it doing the opposite and shrinking, right? What I want to say is the main reason here is because now the Hong Kong stock market, I always feel it primarily functions as an internal loop. What does an internal loop mean? Mainly, it means mainland companies wanting to get foreign exchange, to get foreign currency, will come to Hong Kong. That's the first point. The second is that Chinese concept stocks from America might need to return to Hong Kong. Then in this aspect, there is a chance of being suppressed by the United States or being told to deleverage. So Hong Kong will go up. But why? So why did Moody's leave? Because I think this is due to the national internal circulation, which relies less on external institutions' ratings. The mainland is a market heavily influenced by policies. Policies are everywhere. The mainland operates as a heavily policy-driven market. Truly, it's about 80 to 90% a policy-driven market. So basically, analyzing any data is useless, to be honest. Do people believe in the data? So these China concept stocks plus Chinese capital, along with these investors, may all be in a situation with Chinese capital and Hong Kong capital. So everyone, discuss it among yourselves, okay? Just discuss, not the only one, just discuss. A little less dependence, right? There might still be some foreign investment here. It won't be completely zero because Hong Kong is open, and this is one of Hong Kong's remaining advantages. However, if these Chinese concept and Chinese funded companies are listed in Hong Kong to raise funds, the issue is that just recently, yesterday, there was a report, a video from the Wall Street Journal revealing that it turns out in mainland China, there are numbers, hundreds of data points are disappearing, and many data releases are now stopped. I won't repeat them here. Since these data points are disappearing, how do you conduct ratings? And do you still need an analytical team for this purpose? What kind of analytics would you have? Whether you trust it or not, it's still something. Can you rely on just 10% of this data? But if you stopped hundreds of data, what good rating does the mainland have? So next, either people have connections, know the policies themselves, and then invest, or they just cut their stocks, just like in a casino. Of course, stock markets are like casinos everywhere, but even more purely so. A place to gamble on luck or to bet on policy. You know how to play the odds, right? So for this purpose, even if the stock market goes up, he still loses. Of course, this is just my personal opinion, right? Or in your view, that kind of rise might not even happen. Who knows? S purpose is foolish. It doesn't matter. Any thoughts? Feel free to leave a comment below. I hope. I hope there's reasoning behind it. Actually, or just giving me an emoji also helped me a lot because comments help push my algorithm. All right, let's stop here for today. That's all for today's video. If you enjoyed it, please give it a like, leave a comment, and don't forget to subscribe to my channel. Thanks so much for watching. See you next time.